What's up, traders? Matt from the Trade Brigade here with your broad market analysis. We'll of course cover SPY, the Qs, and IWM. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First of all, obviously a bearish breakdown of balance. On the daily, we had this area right here. There was a hammer that printed last Friday off the low end. There was possibility that it rotated towards the top, but clearly on today's session, breaking that low, closing relatively weak down at the lows of today's session. It's obviously not in play, right? The market is continuing its downtrend that has been started from up here, right? We get that low, lower high, so on and so forth. So the question now becomes, do we make the equal low? And the equal low would simply mean coming down to here, the invasion day, that is going to be 410.65 in your S&P 500. So that's the all eyes on level in the S&P 500s. If we make it there, then we have nothing more than a giant H pattern. Any subsequent lower highs and reattempts turn it into a flush point, and we would look for lower after that. Now, there is the possibility, and remember that we discussed this level on the main channel a week or two ago, of 417.50 producing a higher low. It's the point of control from this massive green sort of bounce day, if you will, and that is going to act as the first potential area of support before we get to the low at 410.65. So keep 417.50 on your radar, but clearly the implications are bearish as of right now in the broad market. On the 30-minute time frame, what else can we learn about today's activity? Well, you'll notice it was almost a straight line to the downside here. And if we take out the Fibonacci's and just measure our moves coming from the 930 high to the low of the first move, this little green candle did not produce a bounce anywhere close to the 38.2. So we'll try once again on the next move from here to here. You'll notice all of this consolidation was well underneath the 38.2 as well. So we have nothing more than bear flag after bear flag. And then we obviously close weak at the lows of the day's session. So we'll remove that. And it's just quite simply bearish, right? There's no real reason to be thinking long right now other than thinking about the potential for a dead cat bounce. Now, is that the wisest thing to be doing? I would argue not really. Even in the post market, we are moving slightly lower. We're 418 quarter by 418.30, right? So that's, a couple pennies underneath where we're at, right around in here. It's not like we've broken underneath that point of control area that we pointed out on the daily, 417.50, but we are slightly lower in the post market, just implying that it's not like, the market closed and immediately there was a buy side reaction that retraced somewhat higher. That simply was not there in the post market. So the bears in full control here. We talked about downside targets. If there is a dead cat bounce, obviously the level you need to pay attention to is right here, 428 up to 429. Treat it as a bit of a zone, this area here. If we get something that looks like this, then what do we have, right? Simply a break retest. This is where you can short if you're an aggressive trader. Stop goes just above that. So again, there's what it looks like. You short here, stop goes just above, targets the equal low here. Or if you're more conservative, it's okay, lower high, and then you take the break of the equal low, right? Something that looks like this. If we never even make it here in the first place either, that's certainly a valid option as well. So that's what we have in the S&P 500. If for some reason there's a massive move like this, I would only start thinking about longs if we can produce a higher low that's back inside of this prior area of balance here. Other than that, kind of skeptical on the long side as of right now. Let's continue along and talk about the QQQ for our Nasdaq 100 and tech. What do we have here? Obviously a little bit more of a firm breakdown. Friday was sort of the giveaway day, got the follow through on today's session. We closed underneath the point of control, also the low of the the Wednesday before the invasion day gap down. Nonetheless, we're underneath all supports, and that's just your only target underneath at 318.20. Keep that on your radar. If we do get something that looks like this, what did I just draw? A 100% retracement. It's very rare that you crack the low on the first attempt. We would expect some sort of dead cat bounce for a lower high, then a reattempt is what should take us lower. We do have a historical gap to fill from 315.81 down to 314.91. And if I scrunch it up, you can see that back in here. There you go. And then anything underneath that is going to take us roughly to 309. Okay, so those are downside targets here on our QQQ, given the relative weakness and the fact that we are already underneath the point of control and last line of defense. Sure, could there be a higher low that does something like this? Yes, but we're kind of stabbing around here in no man's land. It wouldn't be my first choice. If we look at the 30-minute intraday time frame, what else can we learn? Again, very similar to the SPY. If we come in with the Fibonacci's from high to low of the first move, 38.2 was never achieved on the dead cat. We'll try one more time from here to here. Next green candles, I mean, it's just clear, right? There's no move to the 38.2. Even if we take it out from the entire day's range, it would require getting back above that point of control for a 38.2 recapture and potential reversal. So just use that pivot, the 329, instead of your Fibonacci's. Again, everything about this is incredibly bearish. Weak close, dead at the lows, as we're getting an increase in volume. In the post market, we also see a little bit of follow through to the downside as well, 323.50 by 323.52, as opposed to the close, 324.80s. Okay, so just like in the S&Ps, slightly lower. It's not like we have a huge gap as of right now, but it certainly has the potential to turn into one for tomorrow's session, which is something that's interesting and maybe you should make note of, right? If we open on a massive gap down, like let's say the Q's open here, yeah, you are going to look for inventory correction, but only to fill the gap, and then you would look for reversals off of that. We'll take it in stride if the market's actually gapping down come tomorrow's 9:30 bell. So that's the QQQ in a nutshell. Let's wrap up the broad market with our IWM for Russell 2000 and the small caps. What do we have going on in here? We gave up the low of balance. This did not result in any sort of bounce back to the top. It's bearish, right? That's the theme of the broad market right now. In this one though, oops, let's zoom back in. I would point out that this is more in a range like this. Remember that we had this cleaner double bottom activity instead of clear downtrend like in the SPY and the QQQ. So watch this level, right? So if we come down into here, maybe it's the ping pong in small caps, right? Maybe that happens here instead of just blatant trend continuation. It could always just smash right through it, but just be mindful of your 187, well, let's call it 188 just for round number's sake, the bottom of the range, okay? So I would really keep a close eye on that. If we get downside continuation, you know that this is more of a risk off move for our broad marketplace. Once again, very slightly nuanced, but a lower high nonetheless, not able to recapture that 208 level, which we know is oh so important from our weekly time frame here. There's your area of balance, never able to crack back above that. So again, from the weekly, starting to form a bit more of a bear flag. If it bounces, it probably will only bounce off that 188, 187.75. So I would just be patient until we get there and not really look for longs until that area is achieved. Let's go back down to the daily. Actually, I want to talk about areas to get involved back to the short side. Just like in the SPY, if we do something that looks like this, it's a break and retest of that level. So you could be looking for valid shorts up against 197.15 with a stop just above. That's the aggressive trade, right? So you're looking for intraday double tops at that area. Could look like a head and shoulders, right? Any bearish patterns that happen off the break and retest 197.15 is your level. If that's a little too aggressive for you, then again, be a little bit more patient. You take the break of the low here for follow through to the downside, which should take us back to that 188. On the 30-minute intraday time frame, what else can we see here? Actually, I saw something interesting as I was doing this. There's your double top, right? So there's a good example of how that might unfold on a smaller time frame back up against that 197. So if there's anything that does this, and then breaks that neckline here, that's your signal for lower, right? So that's what I was talking about on the daily when we were walking through those scenarios. Anyways, in terms of what the Fibonacci's are going to show us, you guessed it, it's going to be the same exact thing as what we had in many of our other broad market indexes so far. You can see 38.2 never had a candle close above it, although it was better. We did get some wicks that pierced it, never really got price acceptance above. Let's measure the next move from the top. Down to the next green candle, you can see here, not even close to the 38.2, flushed the lows into the afternoon, and even used the low flush point as resistance at 195.25. So there's really no reason to be thinking long, just like everything else. Slightly lower in the post market, not a whole lot, 193.30, 193.46. So, what is that about? I don't know. I'm not good at math. 30 cents lower, I suppose, than where we closed. Overall, bearish implications across the entire broad market as of right now. Just be mindful to not try to chase this to the short side. If for tomorrow's session, we open on a gap down, be mindful of the possibility for an inventory correction to fill the gap and then potentially roll over from there. Or if we accept back in range, it's kind of a neutral day, right? And we would look for chop after that if the gap fills and we accept into range. So those are some things to be thinking about into tomorrow's session. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.